Equity Mates.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, a podcast where we help you learn to invest in roughly 20 minutes or less. We break down the world of investing from beginning to dividend so that you can hopefully make some returns. My name's Bryce, and as always, I'm joined by my equity buddy, Ren. How's it going, bro?
It's good, Bryce. I am glad I finally convinced you to do this episode because I know that you have a real problem
Here we go.
with some unethical forms of vice. And I'm glad that today we can talk about some more ethical forms of investing.
Okay, well, now that you've introed the episode, yes, we're going to be doing an episode of a listeners' requests on ethical investing, what it is, what it means for the investor, forms of ethical investing. But first, I know you've been working long and hard on an Equity Mates ethical investing song. So if you don't mind sharing your ethical investing song with our listeners, take it away.
So I can't share it. We're in a copyright dispute with a few different companies at the moment, and I'm trying to determine who I want to be my distribution label. Both Sony and Warner Brothers, who might be the same company these days, have expressed interest.
Can you give us an insight into the first couple of lines?
Well, as I said, copyright disputes, and there will be a release party when the record's made.
Isn't it? From what you were singing off air before, it was ethical investing. What should we do? Ethical investing, it's good for you. Wasn't that it? I think that was it. Anyway, so
okay, go on. We got to suck that.
No, that was the intro line. Looking forward to hearing the real deal when it comes out. Now that we're all aware that we are going to be doing an episode on ethical investing, Ren, I think it's time to stop with the silliness and get stuck into the serious aspects.
All right, I'll stop with the silliness if you stop with the gambling.
No, I don't gamble.
Or quit the cigarettes.
Both of which are lies. Don't listen to what Ren says.
That game, mate.
So, Ren, ethical investing. Let's whip this one out. We've got... What we're going to discuss is what is ethical investing, the different types of ethical investing, I guess a general view on the market, its growth, what are the options available to investors if they want to invest ethically, some of the performance of major funds, and then a little bit of a wrap up at the end. I think you've got a few things you want to mention.
Yeah, I'll just jump in where necessary.
So, Ren, what is ethical investing?
So, it is investing, but screening out all those companies that do unethical things, or the definition of what is and isn't ethical we'll get into, but in a sense, it's socially responsible investing. It's only putting your money in companies that you think sell ethical things and do so in a socially responsible manner. And so the big forms of it these days are companies that are sustainable, that are reducing plastic packaging, that are not increasing climate change. So sustainability is a big one. There's also a big area around sort of ethical supply chains. So obviously there's been a lot of focus on things like sweatshops in Nike's supply chain, which they've done a lot of work on. But there's a bunch of other real problems in the supply chains of major companies these days. Fresh produce supply chains are notoriously difficult to manage. There's a lot of subcontracting and subcontracting to subcontractors. And so there's a whole movement around modern slavery at the moment. So that's probably the second one. The third, another emerging big category is around the technology companies and some of their practices around data sharing, privacy and stuff like that. So you see some companies being considered unethical because of that. And then there's probably a fourth one, which is the vice industries, the gambling, tobacco, firearms, who you were actually saying you want to make an ETF of the unethical ETF.
Money's money. That is not true. That is not true, Ren.
You heard him say it. I'll have to sing you that ethical investing song. Yeah, so that's a long-winded way of saying ethical investing is investing in things that are socially responsible.
Yeah, nice, Ren. So you're right. Ethical investing, social responsibility investing, and sustainable investing, the broad sort of strokes that it all falls under. Now, I guess one of the questions is then, so these are all sort of screens that fund managers will and individual investors can use to screen out particular companies that they want to invest in. So if I'm an investor and I'm looking to invest in a fund that claims to be ethically investing itself into other organizations, sometimes it's tricky to understand how these companies have screened, and also, are they truly investing ethically, or are they sneaking a few companies in there that really shouldn't be on the list? So I think a consideration that you should take into consideration.
We are on fire this episode.
Wow. Anyway, look for a fund that's a member of the Responsible Investment Association Australasia, or otherwise known as the RIAA. This is a peak body that was created, and they have a certification program in partnership with the New South Wales Department of Environment and Conservation and the Victorian government, so that started back in 2005 with a view to make uniform standards across fund managers. So in order to qualify, a fund manager must make a very convincing case to the RIAA that they have a very specific methodology in place to weed out unethical behavior or unsociable investing, etc. So the process is then independently verified by an accounting firm, and the funds then actually qualify and carry an RIAA certification symbol. So keep an eye out for them if you are concerned that you may be investing in a fund that claims to be ethically invested, but when you look a bit deeper at their list of companies, you question it. Mind you, a lot of fund managers these days do take this pretty seriously as it is a growing industry. I know when we spoke to BetaShares, they have an ethically invested fund, and originally Facebook was on it, and I know that they did a cleansing process and took Facebook out of it for various reasons. So these fund managers do take it seriously. So yeah, look out for the RIA certification symbol.
So I think before we move on, you touched on screens, and the RIAA, I'm not sure where they fall into this, but there's probably two broad forms of screens. There's a negative screen, which is more common, and then a positive screen. And so a negative screen just excludes companies that are bad, so companies that mine fossil fuels, and then you exclude any company that mines fossil fuels. So you're looking to exclude companies. The flip side of that is a positive screen. And so you would say companies that are looking to that are making investments in renewable energy or have over 50% of their power procured through renewable sources. And so then rather than looking to exclude companies at the bottom end of the ethical spectrum, you're looking to include companies that are at that top end.
That are actually making an effort rather than falling in by default just because they're not part of the negative.
Yeah, and so another spectrum of that might be a negative screen might be excluding any companies that underpay workers through their supply chain. A positive screen may be a company that observes 30% higher than the minimum wage as the minimum paid or something like that. Or has a living wage policy for all their team members and suppliers. So just if you're looking at an ETF or a fund, they will make it pretty clear how they screen their companies, and just have a look, is it a positive screen or is it a negative screen? There's no right answer. It's just people have different preferences.
So on screens, I think it's sometimes quite difficult to set up these screens yourself because you need to... The information's not as readily available as if you're just doing a general screen based on financial metrics and that sort of stuff. You'd find, though, that companies that would fall into a positive screen are much more vocal about the fact that they are falling into sustainable engagement and ways of doing business. And so you can go out there and find companies to invest directly in, but the real growth in the industry is coming from the ETF side, which is not surprising. ETFs themselves are seriously growing. But just to give you an idea of the market size, and this was projections by BlackRock, one of, if not the largest
largest
asset manager in the world, trillions under management.
I think 4 trillion, 5 trillion,
something ridiculous. Yeah. So they expect to grow their ETF. ETF sector is expected to grow from 25 billion to more than 400 billion by 2028, which is incredibly huge. And they think mutual fund assets from 3% to 21% by 2028 as well. So not only the ETF funds going to grow, but they think that funds, mutual funds or managed funds in Australia are also going to start including a lot more ethically invested assets in their funds going forward. So it's certainly a growing space.
Yeah, and there's probably 2 reasons for that. One is the obvious: people more and more want to invest ethically, and there's an argument to say that if people are investing only in companies that are ethical, that incentivizes CEOs and directors who are paid in some cases on how their share price performs to make more ethical decisions. The other one, which is probably less talked about but should be more talked about, is that ethical funds generally outperform major indexes. So I don't know if we're going to get into that later, but part of the reason why BlackRock are projecting such a big growth in this segment of the industry is simply because people put money where the growth is, and there's probably some pretty obvious. There's some reasons why this is the growth area. Like, companies that are acting ethically generally are more progressive and forward-thinking, I guess, in a general sense, and so that probably is reflective of their broader culture and business practices and the way they think and stuff like that. You know, if the way you're winning is by engaging in modern slavery in your supply chain, it's probably a sign that the rest of your business isn't too crash hot. But anyway, yeah, just an interesting thing that probably people talk a lot about the ethical side of it, but the performance side of it is pretty compelling as well.
So, yeah, that's a very good point, Ren. And so as an investor, how can I access this growing industry or growing form of investing? So as we've mentioned, ETFs is primarily the way to go at the moment. From a beginner point of view as well, very easily accessible. You've got your big hitters, Vanguard, they have ethical funds. Then also BetaShares has one called FAIR, FAIR. They're an Australian sustainability leaders fund. And then they also have a global sustainability leaders fund called ETHI. So ETHI, yeah. So they're both available on the ASX. Go to their website to check out what companies they're investing in, just to give you a bit of an idea of how their screens work. Now, there's another one called the Australian Ethical Managed Funds. They allow you to invest in their funds off-market as retail investors. So you need to do it all through their website, but they have a large number of funds available, all ethically themed, I guess, emerging companies, international, Australian, diversified, and then they also have a bit of fixed income as well, which would be interesting to have a look at. Now, as I said, they are all offline, so you need to go to their website, but to Ren's point, they are good because they show you the difference between their negative screen and their positive screen, so they go both ways. Another one that I've had my eye on for a while is Morphic Asset Management, and they have Morphic Ethical Equities Fund, which is on the ASX, MEC, and that's just a list of screened international companies as well. So a couple of options there for you to start having a look. There's many more, but I think that's just a good starting place. Anything from you, Ren, regarding that?
So I think that's a pretty good rundown of the funds. If people want to invest ethically, they can also just invest in individual companies ethically. I think a really good starting point, you know, as you said before, there's a data problem here. We don't have good access to data for a lot of these companies. So a good starting point is to look at some of these funds and some of these ETFs and see the companies that they have included. And then you can base that as a sort of you can assume then that they're ethical or they've passed some form of screen, and then you can do your own research on the back of that. So that can help narrow down the list of companies that you may want to invest in. But companies are also more and more conscious of this group of ethical consumers or ethical investors in this case. And so a lot of companies, as well as producing an annual report, will produce a sustainability report. And obviously everything in there you need to take with a grain of salt because it is from the company itself. They're not going to tell you if they're engaging in modern slavery in the supply chain. They're not going to tell you how much of their energy comes from thermal coal or whatever it is. But it's a good place to start. It's a good place to see what different companies are doing. And there's generally a lot of stuff that these companies are doing that you don't see and you don't hear about. And so just jump on these investor relations websites for the companies and read some sustainability reports. Might give you a bit of hope for corporations acting where governments are failing to.
Yeah, good call out, Ren. Good call out. So I think to finish off, there's heaps of stuff online. It's a very we've already said it's a growing.
Just in a general sense, there is heaps of stuff online.
Well, I was going to go through the top 10 performing funds, but I thought if I just list them off, that's going to be quite boring. So I think, though, the number one was Pengana.
We'll include them in our song.
We'll include them in the song. Renizig is going to rap them out. The number one performing for 2018 was the Pengana High Conviction Equities Fund, and we're actually in conversation with Pengana at the moment to do an interview for a private equity fund. So we might actually try and get them on to chat about their conviction fund. But Rem, something I just want to close out with, and I found very interesting. We all know that Norway has a huge sovereign wealth fund, absolutely enormous. And they have changed their approach and will soon be ripping up to $3.7 billion out of Australian fossil fuel companies after the Norwegian Parliament passed a set of ethical investment rules. So essentially what they've done is they've changed the rules to dictate the way that their wealth fund can invest, and their wealth fund owns a large proportion of Australian stocks, some of which are BHP, Santos, Oil Search and the like. And for their screen, they will no longer be able to invest in them due to this ethical investment approach. So very interesting.
Can we also point out the irony that a lot of this sovereign wealth fund money was oil money? Yeah. So
quite ironic, but hey, that's what happens.
Yeah, it is.
That's what happens.
It is a really interesting phenomenon that companies and investors are driving change in a way that governments aren't around the world. Well, actually, to be fair, in this case, governments did act, but in Australia, we haven't had energy market certainty for since 2009, so a decade. And yeah, it blows my mind that there is such a consensus in the business community around some of these things, but we don't see action. Yeah. So that's probably beside the point. But if you assume that at some point we will see a price on carbon or a carbon trading scheme or, something else like a gas capture scheme or whatever it is, companies that are less exposed to carbon-based energy that are sort of have more behind the meter solar and renewables and stuff like that will be protected more. So there is a lot of, these days, there's a lot of business sense in becoming more sustainable, and that is probably part of the reason why we're seeing that reflected in their performance. I mean, just to speak from my experience, like the biggest driver of better sustainable outcomes in my area of the world in sort of waste and recycling and stuff like that is that landfill is so expensive and it continues to become more expensive that it's a dumb business decision to keep throwing things in a hole in the ground, let alone because you're trying to become more sustainable.
Nice wrap up, Ren. So that's a brief overview of ethical investing. We've given you some insight into what is available in Australia from an ETF and fund management point of view, and a broad sort of stroke brushstroke view on the main forms of ethical investing. I would recommend heading to the websites for the fund managers, having a look at how their screens work. They're all very prescriptive about how they go about it, and comparing the difference between funds, because investors being investors always try to differentiate themselves in some way. So important to understand exactly what's going on in all those funds. But as we said, very much it's a growing industry and doesn't seem to be slowing down anytime soon. So it'd be good to think about getting some exposure to it.
Yeah, 100%.
Always good to chat
And
stocks.
good to see you adopting some of that in your personal life as well.
All right, well, good to chat stocks, Ren. You've committed to a wrap to open up next episode to do with ethical investing. So best of luck practicing that over the weekend.
I think I'm getting a bit sick. I might not make the next episode.
Anyway, if anyone has any questions about anything or would like to give us some feedback at all, hit us up on social media or our email contact@equitymates.com. Make sure you're following us on all social streams as well. And we look forward to chatting stocks with you soon.
Equity Mates and the people appearing in this program may have positions in the companies mentioned. This is general advice only. Please speak to a financial professional to understand how it may pertain to your individual situation.
Equity Mates!
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.